trial balance, right, where we took it and just listed all our account balances, the debit ones and the credit ones, and be sure they're balanced. Y'all know how to do that. We did that when we did the T account. Okay, so what we're going to do is look at what we call the worksheet. The worksheet is used to summarize our information. That's all it is. Okay, it's just a form that we use at the end of the month just to put all our balances in, summarize. In other words, we're going to put all our information right there so we can, instead of doing that trial balance on a sheet of paper, separate sheet of paper, we're just going to do it in the first column. This is going to be our trial balance so that we want to be really sure that at least we've done the right amount of debits and credits. So, like Shonda said, you could have made an error somewhere, right? Because you still might balance. But if it looks suspicious, which you thought it did, right? Then you're going to go look and see, what happened. All right. So, first column in our worksheet is the trial balance column. So, what you're going to do is you're going to have all of your accounts from your chart of accounts, all the accounts that you got on your chart of accounts that you have listed. Then you're going to go look at each one, pull out the balance. If it has a debit balance, it's going to go in the debit column. Or a credit balance, it's going to go in the credit column, just like your trial balance. And then you're going to add up your columns, see if they balance. So we have a trial balance column. Each section of this worksheet, each section has a debit and a credit part. So the trial balance has a debit and a credit. Then we have a section called adjustments. We're just going to go ahead and look at the trial balance section. So the first thing we do, enter our account names from our chart of accounts or from your ledger. You've got a ledger account for it. It's got to be on there. So we've got to go look at the balances, each one of those accounts, and enter the balance, either the debit or the credit column. We're going to total twice. Be sure that they equal. And if they equal, then at the bottom of the column, you're going to put a double rule. The double rule means I finished calculation for that column. Just like on your income statement or your balance sheet or any of your statements, if you finish calculations, you put the double line that says, I'm done. I'm done with calculations. Okay. All right. So let's go on here and look again. And they've added all the accounts, but you're going to see a have different names. They look a little different. We've got one that says accumulated depreciation equipment, which you haven't heard of before. And we have supplies expense, rent expense, and depreciation expense on equipment. Okay. So these are new accounts introduced in this chapter because you're going to use this. This is the kind of account you use to make what we call adjustments. We're going to talk about the adjustments. They don't have their arrows pointed.
But the supplies and the rent expense, those aren't new, are they? Because, I mean, we just dealt with those.
The rent, yeah. We've had. You probably had rent expense.
And
these are just the accounts you're going to, you haven't had supplies expense yet, right?
I thought it was in the supplies.
What if you had supplies? What kind of account was it? What kind of account?
Asset.
An asset. Alright. So remember, somebody asked that question, I think, way back when we were talking about supplies. I think it was James. And he said, what happens when you use them up? Right? So here's where we make the adjustment. This is what happens. It's how we account for using up those supplies. Okay?
So,
Yes, you're going the other way with it. Okay?
okay, I get the whole supplies expense and rent expense. I mean, I understand that.
Right.
But
Well, you don't have to understand any of the the rest of it now, we're gonna go over adjustments
Okay,
here.
you're gonna go over that.
All I'm doing is showing you that you've got some new accounts. And we're gonna talk about adjustments as soon as we're gonna talk about each one of them, okay? Never mind. Okay. I just remember Doug asking that question. Okay, so what we do is we go to our trial balance section, go to each one of our ledger sheets. Here's our ledger sheet, right? Find the balance. What column is it in? That's the debit. Take the balance, write it in the debit column. Everybody okay with that? And we go all the way through and we enter each one of our balances. Okay. And then we total them up. And we really do hope they balance, right? Yes! Yeah, they did. So then we put a double line. Okay. A double line under it. Can y'all see that? Okay. This thing just feels like it's down below the
So you're getting this information off your ledger,
Yes, yes,
your balances off.
yes. You just go to each one of your ledger accounts, pull out the balance, and put it on. Okay. All right. Everybody okay with that? We did that kind of because we did a trial balance on our. Remember when we did the T accounts, we had to pull out your balances. We did that. Okay. All right. So that's all you have to do for that first column. And we've done that, so that's not really anything new. Okay. All right. Place a double rule. As long as we balance there, we can go on. Okay. All right. So, adjusting entries. In adjusting entries, this is the first place that these entries are written down. Now, on all our other entries, they are written down where first? In the journal, right? First place we write our transactions in the journal. Yeah. Okay. With adjustments, the first place we write them is here. The adjustment column on our worksheet. Okay. All right. So, let's look at the adjustments. Supplies. So, we started at the beginning of the month with $1,500 in supplies. And what we do is we either have a place where they sign them out as they take supplies and keep up with everybody's balance of what's left, or we go in there and count. Do an inventory, see what's in there. Okay. So if we had $1,500 at the beginning of the month, and then at the end of the month, we go count. We'll count to see what's there. And at the end of the month, we've got $1,000 for it. So what does that mean, Mr. Eklund?
Less $500.
So we used up $500 worth of the supplies. Everybody agree? Started out with $1,500. We went and counted. We had $1,000 left. So we have $500 that we used. Make sense?
Yes.
Okay. So that's our first adjustment. Somehow we need to get that ledger account of supplies to be less $500. Plus, we want to show $500 as an expense because we used up something, one of our assets. So, what we do, we go to our adjustment section. We also label our adjustments to show which debit goes with which credit. We've got an A. We debited our expense. Expenses, what? Always debited, right? Remember that. Expenses are always debited. Debit the expense. In this case, we're crediting the supplies account because that's what we use up. And we want the correct balance in our supplies account. Okay. Alright. So we're just showing it, reducing supplies, and now we can expense that amount that we actually used up. Make sense? Yeah? Okay. So adjustments are things that we have to do at the end of the month for anything that happened that has not been written in the journal. Because everything's got to get put in the journal. We're gonna write these in the journal later. Right now we're using our adjustment section to get them down, to use them in in our end of the month summary or calculation. Okay, so supplies, okay with supplies, everybody understand that one? Okay, keep going. All right, we have, remember prepaid rent, everybody? Somebody had asked about that one too, I think. Prepaid rent, we paid for 2 months, but we hadn't used it yet, so it was an asset, right? So now, at the end of the month, we've used up a month, right? So our prepaid amount is incorrect. It's showing wrong amount.
Right.
So,
We can fix it.
yeah, we're going to fix it. So if we paid 2 months worth, and 2 months were $8,000, then 1 month is half that.
Right.
Well, that means it was $4,000 a month. So, okay, if we used up December, that means, or one of them, yeah, December, $4,000, it's got to come out of our prepaid. We're showing the incorrect amount as an asset. We don't want to do that. So how much did we use? 4,000, so that's our adjustment. And anytime you have an adjustment, you're going to have an expense, which is going to be your debit, and you're going to reduce an asset. So the asset, whatever it is, gets the credit part. Expense gets the debit, the asset gets the credit. Okay? So, you're going to, rent expense gets the debit, so we'll see that.
Yep.
And what gets the credit?
Prepaid rent.
Prepaid rent, that's our asset that gets reduced, right? Okay, with me so far? Everybody? See what we're doing? We're making those adjustments so that we're sure. We've got to get our accounts correct before we do our statements.
In other words, what you're doing is balancing everything out, for lack of a better word, so
Yeah.
it can be correct at the end.
Exactly. I want my ledger accounts, very, very important. Before I do my statements, I want my ledger accounts, my accounts to show absolutely the correct balances. And I want to be sure I get to take my expenses for this month. Because if I don't, what do I have to do at the end time? Pay more taxes, that's right. So, it's very important that we recognize and get all of our expenses that we taken out of that income. Okay. All right. So, let's see. That was 2 of them. Now, depreciation. And remember, we talked about buying those assets. And we bought equipment. We paid cash for it in some cases or whatever. Set up a payable account. But we didn't charge it as an expense, correct? All we did was show that we bought an asset.
Right.
Now, as we go through doing our business and working our, using the equipment, using the vehicles or whatever it is, we're going to be using up some of the value of that equipment, right? Those stoves, right? Those washers, those bins. We're going to be using up part of the equipment, value of that equipment every month. As it gets older, it reduces in value. So, again, one of our main principles is to apply all the expense that we can that applies to or is used during that applies to or matches up with that income for that month. So part of the expense is the use of the value of our equipment. And we want to recover, be able to expense that equipment as we use it up. Helps us on our taxes, right? Cover. Okay. So as we do it, we determine how much of the value of a piece of equipment or a vehicle that we use up each month. And that's the amount we can use as an expense. Make sense?
Is there a set amount?
Yes, there is. And what we're going to do is figure out that set amount. And in this class, we only use one method of figuring depreciation in accounting too. You learn a bunch of different methods. But in this class, we're just going to use one method, and it's called straight line depreciation. So, as we expense this, cost of that equipment that we're using up the value, it's called depreciation expense. Okay, so here's how we figure it. We're going to use what we call straight line depreciation. And here's the formula for straight line depreciation. Take cost of the equipment or whatever the piece that we're depreciating, cost of the equipment or the vehicle minus any salvage value that we think the equipment would be worth at the end of its useful life. Maybe just junk speed, scrap iron, whatever. Okay. So we have cost minus the salvage value divided by the estimated months of the useful life.
So how, I guess this is going to sound kind of stupid.
No.
How do you know what the salvage value is?
You either
Because
go,
mine might be different than yours.
exactly, you go by whatever the manufacturer says, whatever you think, historically, what you think people have been able to do, you may just put down zero. So, zero is usually, you think it's going to be worth absolutely nothing at the end.
Washer or dryer, it's got copper in it.
All it down to the junkyard.
Here's what I'm talking about.
You don't have to be exact. This is just an estimate. You're going to recover your costs regardless. Okay. Salvage value is only there for certain types of things. Maybe a vehicle that you do think you probably get something for it in
Well, that's what
for
it says.
5 years of age, or you can just put an estimate on there. Doesn't matter if you sell that vehicle. You're either going to make up at the end have a loss or a gain, or zero it out. A lot of times on our problems, we're going to see zero as the salvage value. Because either you don't know, or there's not a way that you want, or you want to go ahead and
So it's really not going to, I mean, it's not going to affect our, okay, well, that's what I'm driving at. If my salvage value is different than hers, and hers is different than his, and on and on and on like that, it's not going to matter when we do our homework.
It won't matter simply because you would be given the amount anyhow. On your homework, I'm not you given the amount if there.
Okay, so
I think
you're getting it.
All,
Yeah.
all I'm really doing is,
What?
the orders that become, that's for their right on purpose.
Exactly. Or whether or not at the end they have gain or loss. Doesn't matter, yeah. Or you may prefer to say zero and take as much depreciation as you can each month to save on taxes now. Right? Either way, it's going to work itself out in the end, because either you're going to show a loss or a gain in, or you're going to take the depreciation now, which I probably would have if I was in business.
You're probably,
I would make it monthly, now. So,
and the way I figure it, this just makes you better off just putting it in there.
okay, so that's true. Okay. So now your useful life on your equipment, that's something you would go by. Let's say different equipment usually lasts for different amounts of time, right?
Right.
Some things. Let's see if it gives me.
Well, like when you get a warranty on.
And they will tell you when you buy it. It should last you under normal wear. In your business, whoever sold it to you should say, well, it's going to last you 10 years. It should last you 5
Trying to
years.
make it sell those.
Right. Or some equipment like printing equipment, they may say it'll do so many copies. It'll run so many sheets. Okay? Worth 2 million sheets or copy machine now. It's supposed to give us so many, at least so many impressions before it dies or whatever, right? Okay. And so it's different for different things, because we can figure this depreciation on different methods, which we're not getting into in this class necessarily, but it could be depreciation figured on how many sheets we ran this month, right? And how much of the value we used. How many miles we put on something, done by mile. Right. So, how many products it produced. Flapping. Yes. Toothbrushes it ran, or it may. So, it depends, but right now we're just going to use cost less salvage value, and we're going to go by, they will give us our useful by, but normally you're going to have to say as the production, whoever manufactures it. Okay. So in this case, we purchased equipment that cost $11,000, and they're telling us that the useful life on this equipment is 5 years. Now our formula is figured on what? Years or what? Months. So we change our years into months, right? 60 months. So we can come up with a monthly amount that we're going to use as our adjustment. And so we have our 11,000 minus 0, no salvage value, divided by the 60 months. And that gives us that we're going to be able to use as an expense to be an adjustment each month, $183. Okay.
So you take $183 out of it every month.
Every month. We're going to show depreciation expense, $183.
So you only have to calculate that once.
Once. That's right.
Okay.
Yep. One time.
That's handy.
Then from then on,
You know,
it is.
as long as you know what it is.
That's right.
You know,
Then you just know my
you never have to
depreciation.
calculate it again.
Exactly. Exactly. So our adjustment for depreciation is recorded with a debit and a credit. Now, our asset account has a debit balance, right? Now, the very important thing to note is that we never changed anything in our asset account balance. Never gets touched. When you bought it, you debited that equipment and that's it. Now, as we're making these adjustments each month, we have an account called a contra account, meaning it has a contra or a different balance from the asset, since it has a credit balance. It's called accumulated depreciation on our equipment. It's accumulating that depreciation each month. So first month it would show $183, next month we're adding another $183, so it's accumulating all that depreciation as we're taking it each month. Okay. So we never touch the asset account, we use the accumulated depreciation account to keep up with the reduction in value of the asset. Okay. Alright, so we debit depreciation expense, we credit accumulated depreciation on the equipment, and then then we double line it, we add up both the debit column and the credit column. I hope they match, or go back and check. Double line it, we're done with that part. Okay. Okay. Alright. So we've done all of our adjustments and we're ready to go to the next column. Now before we go, we're going to look at what we're doing as we're accumulating this depreciation. So we have our equipment, which always shows the original cost, always. Okay. We don't do anything with that unless we sell it sometime. And then that's when we do something to that account. Okay. Otherwise, we're just keeping up with accumulated depreciation, which is keeping up with how much we're accumulating each month, right? So if I want to know the book value of my equipment, that means how much we take our cost less total accumulated depreciation, and that gives us our book value, the value that we still have left to depreciate, or the value that is still good, right? So this would be our book value. Alright. Okay. Alright. That's loud. That's somebody outside. Okay. Alright, so we good on that? Alright. We're going to stop right there. The rest of it's just, well, I'll tell you what. I think we're going to complete it. Okay, let's go ahead and complete the worksheet. The worksheet, after you've got your adjustments, that's really the only thing you have to do any figuring on. And got your adjustments. The next step is to prepare the worksheet.